Imagine this. It's the middle of the night. Your phone lights up with a market alert. The stock you've been watching just dipped 5%. Do you jump in or wait it out? This isn't a dream. It's the future of trading. Nasdaq is rolling out 24-hour trading days, and it's about to change everything. But here's the real question. Is this a golden opportunity or a risky gamble? Picture this. You're up late with a newborn, rocking them back to sleep, or working a night shift, sneaking in a quick break to check the market. But here's the catch. What if you make the wrong call? What if the market moves against you while you're still half asleep? This isn't just a hypothetical anymore. With Nasdaq's 24-hour trading plan, this could be your reality. The quiet of the night, the glow of your screen, the rush of adrenaline, it's all part of a new era where the market never sleeps. And whether that excites you or makes you nervous, one thing's for sure. The game is about to change. Today, we're kicking the tires on Nasdaq's 24-hour trading plan. I'll cover why Nasdaq is making this bold move, how it could impact stock prices and trading volumes, the risks you need to watch out for, the best strategies to navigate this new era of trading, and stick around until the end because I'm revealing the ultimate hack to make 24-hour trading work for you without losing sleep or your sanity. Whether you're a seasoned trader or just starting out, this is the video you don't want to miss. Let's get into it. All right, let's start with the big question. What's the big deal about 24-hour trading? For decades, the stock market has operated on a strict schedule, 9:30 a.m. to 4 p.m., Monday through Friday. But Nasdaq is flipping the script. By 2026, they're planning to keep the lights on 24/7. That means you could be trading stocks at midnight, 6 a.m., or even during your lunch break. But why now? What's driving this massive shift? Well, a big part of it is the global demand for U.S. stocks. Right now, international investors are stuck navigating a maze of time zones. Take a Japanese investor, for example. When the U.S. market opens at 9:30 a.m. Eastern Time, it's already 10:30 p.m. in Tokyo. By the time the U.S. market closes at 4 p.m., it's 5 a.m. in Japan, way too early for most people to be awake and active. This means a Japanese investor could completely miss critical market events. Imagine this. A major U.S. company like Apple releases an earnings report after the market closes. By the time the Japanese investor wakes up, the stock has already surged 10% in pre-market trading. They've missed the boat and potentially a huge opportunity. Or think about an investor in London. The US market opens at 2:30 p.m. their time, which is manageable, but it closes at 9 p.m. If there's breaking news after hours, like a sudden merger announcement or a Federal Reserve decision, they're left in the dark until the next morning. This is the problem Nasdaq is trying to solve. By going 24/7, they're giving international investors the chance to react to market events in real time, no matter where they are in the world. But here's the catch. Is this level of access a blessing or a curse? Let's dig deeper. Here's the deal. The world is obsessed with U.S. stocks. In June 2024, foreign holdings of U.S. equities hit a staggering $17 trillion, almost double what it was 5 years ago. Why? Because U.S. companies like Apple, Tesla, and Amazon are global giants. Investors from Tokyo to London want a piece of the action, but time zones have always been a barrier. So avoid costly finance mistakes. Finance Fiascos Volume 1, Raw Confessions, plus mind map PDFs for bite-sized quick review of these videos. Use code CLUE10 for 10% off today only. Nasdaq's 24-hour trading plan is their answer to this global demand, but it's not just about international investors. Remember the GameStop saga? That was just the beginning. Retail investors, regular people like you and me, are playing a bigger role in the stock market than ever before. With apps like Robinhood and E-Trade, trading has become as easy as ordering food online. Nasdaq's move to 24-hour trading is partly about catering to this new wave of investors who want the flexibility of trading whenever they want. And let's not forget the competition. Nasdaq isn't the only one making moves. The NYSE is also planning to extend trading hours to 22 hours a day. And let's not forget about alternative trading platforms that already offer overnight trading. Nasdaq's 24-hour plan is their way of staying ahead of the game. Now let's talk about what this means for stock prices and trading. Okay, so the market is open 24/7, but what does that actually mean for stock prices, trading, volumes, and your portfolio? Let's break it down. Higher trading volumes equals more action. One thing's for sure, trading volumes are going to skyrocket. With investors from all over the world jumping in at all hours, the market is going to be busier than ever. This could lead to more dynamic price movements and potentially more opportunities to make or lose money. But here's the thing, liquidity is like a double-edged sword. More trading usually means more liquidity, which is great. It means you can buy and sell stocks more easily without drastically affecting the price. But here's the catch. During overnight hours, liquidity might still be lower than during the regular trading day. That could lead to wider bid-ask spreads and more volatility. Speaking of volatility, get ready for some wild rides. While increased liquidity can stabilize prices, the lower participation during overnight hours could make the market more unpredictable. For day traders, this could be a gold mine. For long-term investors, it might be a headache. Here's something you need to know. During extended hours, the national best bid and offer rule doesn't apply. That means prices on different platforms might not match up. If you're not careful, you could end up buying a stock at a higher price or selling it for less than it's worth. Always use limit orders to protect yourself. Now, let's break down which stocks and sectors will be most affected by this change. Not all stocks are created equal, and some will feel the impact of 24-hour trading more than others. For example, big companies like Apple, Microsoft, and Google are likely to see the most action during extended hours. These stocks are already popular with international investors, and 24-hour trading will only increase their appeal. Then there's the auto industry, which is deeply tied to global trade and economic conditions. With 24-hour trading, news about tariffs, supply chain issues, or economic data from other countries could cause big price swings in auto stocks. And let's not forget, sectors like energy and commodities are highly sensitive to global events. If there's a major oil spill in the middle of the night or a geopolitical crisis, you can bet these stocks will react fast. But before you get too excited, let's talk about the risks of 24-hour trading. While 24-hour trading sounds like a dream come true, it's not all sunshine and rainbows. There are some serious challenges you need to know about before diving in. First, even with 24-hour trading, not everyone will be awake at 3 a.m. to trade. That means liquidity could be thin during overnight hours, leading to wider spreads and more volatility. Here's the kicker. Lower liquidity doesn't just mean bigger price swings. It also means you might struggle to buy or sell stocks at the price you want. Picture this. It's 3 a.m. and you're trying to sell a stock, but there are barely any buyers. The bid-ask spread is huge, and you end up selling for way less than you hoped. Frustrating, right? This is the reality of trading in the middle of the night. Second, with the market open all day, every day, it's easy to get caught up in the hype and make impulsive trades. Remember, just because you can trade at 2 a.m. doesn't mean you should. Let's talk about the psychological toll. The constant availability of the market could lead to burnout and poor decision making. Imagine this. You're up at midnight checking your portfolio, then again at 6 a.m., and then throughout the day. The market never sleeps, and suddenly, neither do you. This kind of non-stop access can create a sense of FOMO, fear of missing out. You might feel pressured to make quick decisions, even when you're tired or not thinking clearly. And let's be real, trading when you're half asleep or stressed is like trying to drive a car on no sleep. You're bound to crash. And third, if you're trading on margin, borrowing money to trade, be prepared for higher rates during extended hours. This could eat into your profits, so tread carefully. Margin trading during overnight hours is a whole different ballgame. For example, let's say you're trading on margin at 2 a.m. The stock you're holding suddenly drops and your broker issues a margin call. But because liquidity is lower during these hours, you might struggle to sell your position quickly without taking a big loss. It's a high-stakes gamble, and one wrong move could leave you in a financial hole. But wait, there's more. Let's not forget about the risk of missing important company announcements during off hours. Right now, most major news, like earnings reports or merger announcements, happens during regular trading hours or shortly after. But with 24-hour trading, companies might start releasing news at any time. Imagine this. You're holding shares in a tech company and they drop a bombshell earnings report at 2 a.m. By the time you wake up, the stock has already tanked 15%. You're left scrambling to react, but the damage is already done. And then there's the increased risk of cyber attacks. The more hours the market is open, the more opportunities there are for hackers to strike. They could target trading platforms during low liquidity hours when fewer people are monitoring the systems. Picture this. A hacker manipulates stock prices or executes fraudulent trades while most traders are asleep. And because liquidity is lower during these hours, the impact of such an attack could be even more severe. It's a scary thought, but it's a real risk in a 24-hour market. So, how do you navigate this new world of round-the-clock trading? Let's talk strategy. First, stick to stocks with high trading volumes. These are less likely to experience wild price swings during low liquidity hours. Second, use limit orders. They're your best friend in a volatile market. Limit orders let you set the price you're willing to buy or sell at, so you don't get caught off guard by sudden price changes. Third, keep an eye on global markets and news. A major event in Asia or Europe could impact US stocks even in the middle of the night. And finally, if you're new to extended hours trading, start with small positions. As you get more comfortable, you can gradually increase your exposure. Now, let's talk about the tools you'll need to make 24-hour trading work for you. Not all platforms are created equal when it comes to extended hours trading. For example, Interactive Brokers offers overnight trading for thousands of US stocks and ETFs. Robinhood provides 24-hour trading for over 900 stocks and ETFs. Charles Schwab offers extended hours trading and 24/5 trading on its Think or Swim platform. And E-Trade allows overnight trading for popular large cap ETFs. So what's the bottom line? Is 24-hour trading worth it? Nasdaq's move to 24-hour trading is a game changer, no doubt about it. It opens up new opportunities for investors around the world, but it also comes with risks. Increased volatility, lower liquidity, and the temptation to trade impulsively are all challenges you'll need to navigate. For retail investors, this could be a chance to capitalize on global market movements in real time. For institutional investors, it's an opportunity to execute large trades more efficiently. And for international investors, it's a gateway to greater access to the US market. But remember, with great power comes great responsibility. Stay disciplined, stay informed, and don't let the excitement of 24-hour trading lead you astray. If you found this video helpful, don't forget to hit that subscribe button and check out the next video popping up on your screen.